Pacheco. I'm an economist, so I have a major in economics development, especially focused on capital accumulation, and I have a minor in international economics, and my focus is geospatial territories. So how accumulation of capital works on distributed distributed territories. So this is my background is economics. I was always fascinated about the market dynamics and the fallacies of neoclassic models that assumes 100% of distribution of the information is distributed 100% through all the parties and through all the territories. So this is what it how I started my academia. Then I moved to technology. So I've done a path of being a developer and a project manager, building multiple products for banks, especially focused on loans. So my experience led me to understand that also big companies tend to focus a lot on hierarchy and internal processes, and less about the nature and the impact of the technology in people. And that's the reason why I've was missing a lacking of a fit for purpose. So I've been investing also in my career, in my personal life, about how to facilitate business models. How can we bring agile methodologies to framework operations? And in my free time, also traveling around. So I've kind of a train addicted. So I did varied train journeys through Trans-Siberian to covering the entire Russia, Mongolia, and China territory, also covering Australia. So I'm very fascinated, especially in remote regions, and I find it fascinating how economic works on, for example, places like Siberia or Gobi or Alex Springs, kind of the desert areas where communities need to develop their own economics. So that's my motivation. I found Papersoft the perfect fit because they were in the journey of digitizing the capabilities of these agents that are the capillarity of financial system in emerging markets. And this is very fascinating for me because they are thrived with innovation environments. So my suggestion for people that start, and especially if they are building for rural or remote regions, for low-tech users, is that they try to focus a lot on their bias. So typically our day-to-day and access to financial services and technologies fairly easy on a urban space, but in rural areas is completely different. So investing one hour in building a persona schema or a day life visiting customers or agents during their journey on daily journeys, it's much more relevant than one hour building something on your feature Slack or MVP. So focusing on making sure that your bias is at check, because this will give you, and you will capitalize this later on much faster. The next tip that I will give is start building faster. Don't wait for having being incorporated into a company to start building stuff. You only learn from failure. So as fast as you start your own projects, building technology for good, as fast as you do this, the more in light you will be of what's the direction that you want to take. If you take basically the red pill that you want to make a world better, and technology is the way to pursue that. I lead product and growth at Papersoft. Papersoft is a company that has 20 years experience on digitization of processes, typically centralized processes. That's how the company started. And then over the last 10 years, it extended the digitization and processes that the focus into a more hands-on approach with the points of sale. This is how the transition was made. We started focusing on ID reconciliation, and then extended this KYC capability to the field, now offering a full range, a more holistic view about agent networks covering ID verification, payment system, the agent network management and non-functional capabilities of the networks. So our technology is called Rainbow. So Rainbow is by Papersoft is a last mile banking ecosystem. We have built a low-code, drag and drop kind of a tool for banking software, as a banking software to enable financial inclusion companies to build, connect, and distribute their services to last mile locations by a network of dedicated agents, staff, or existing aggregator community. More recently, we have found out that there's a big traction in the market for non-dedicated agents, and insights from multiple entities like FINA or NSC show us that their niche profitable business specifically on rural areas, and this led us to create a new segment where we address not only financial service companies, but also this non-dedicated and non-exclusive agents with out-of-the-box environment, so that they can extend their services to not only customers that we serve, but all available services in the market. I will get into some details later on. So at the end of the day, we are experts on alternative delivery channels for financial services, such as mobile money, MFPs, and agent-led fintechs, so that they can efficiently broaden their services with their services into the entire the territories where they operate. We help them extend this capability and choice of services and products that they serve in hard to reach users, so that they can be a part of this economic participation using digitized tools so bringing them to the formal economy. We basically have here three areas that we focus on, that we understand agent networks are relevant. The first is they are critical entry point into the digital economy. So they are the first touch point that remote areas have to not only financial services, but the entire digital economy. They participate typically cash in, cash out functionality, where you touch base a formal and informal economy, and cash in functionality brings economy transition to a full digital formats and brought the digital financial service access to the population. And the last point, we see it also as the source of innovation due to their particularities of demand aggregation, and we can see this from multiple regions, extending to non-financial services use cases such as government services, e-commerce from multiple regions. So this is basically our view and focus on agent networks. A typical tradition, agent networks cover the different parts that compose them, that I would separate on capabilities for ID verification, payment system, non-functional business cases, and agent relationship management. They are spread around in broken processes. So typically you see that the traditional agent networks will be focused, will have a chunk that will be dedicated to transaction related use cases, and for this there's substitutes of our solution like Software Group, Athletics, Siva, FilmPro, that are very focused on transaction only. But what we find out is that the actual real cost is hidden on broken process. That could be entitled to things related to onboarding KYC, paper forms, broken process or channels of communication that can be landed up on WhatsApp channels, where you cannot take the advantages of that data, spread it around, and also multiple apps to cover the need to support efficiently the network. So we find out that 20% of the costs are actually related to transactions, but 80% are hidden costs. So some examples here that we see, besides the one that I talk about, broken process that takes to leakage and operational costs. There's issues related to e-float, to that will lead to the process being stopped. So some data that we got from the market is 60% of the agents run out of cash or float on a weekly basis, and this disrupts their functionality. And because the systems are broken in multiple pieces, it's hard to have a system that could operate accordingly. So this is why we have developed some capabilities so that the agents can work on overdraft automatically, so that they don't run out of e-float. But also cash alerts to master agents or super agents, depending on the terms that we use here when they operate on liquidity, so that they can create alerts to circulate either getting money from the existing operations or delivering money for them. Also helping them then to go to the final cash point for full reconciliation. So this is an example of how the vision is a little bit more broad than what you typically see on agency banking systems or agent network systems. We also find that 80% of there's 80% of agents that have traveling costs associated with this. So the way we design the different profiles of agents, they are designed within the system for having a unit agent or aggregators or super agent or master agents according to regions, so that to avoid the agent to move around, there will be a system in place of collections of cash money to avoid specifically this. So instead of you needing to rebalance within your bank, there's actually a network that supports you on day to day. This is how you don't create the disruption that I was mentioning that affects 60% of networks, agent networks. Then what we also find that is relevant is that agents on a typically agent network environment, they complain about the technology that they use. So 59% they complain about the technology stopped working. This was the reason why we thought that we needed to design this from ground up, so the solution is able to completely work offline. It has specific conditions, so it can consume APIs as our similar competitors do, but also can run on USSD rails, doing the match if the quality of the network is available to execute these transactions. This could look into a small part, but actually has a lot of impact to the agents. Another relevant point is more than 10% of the OPEX costs of the agents come from internet and data related. So this capability to run the transactions on the USSD rails facilitates this, because it takes out this operational cost that they have. The solution was also built with the logic to shrink data, so works offline and shrinks completely the data, encrypting in the device, so with some extent of security parameters that you can configure. It shrinks the data, so whenever you need to consume online, you're actually consuming with a low rate. And this is extended also to biometrics. So if you go into typical agent networks where you're taking pictures or you're taking fingerprints, you can easily end up with a package that will lead up to 5 megabytes or even 10. So if you have multiple fingers and multiple photos. And this is because it's not controlled from the source for the specific use case. So data is expensive. This is one of the use cases. Something that we've also been quite successful is the capability to have no costs using the application. So we do partnerships with telcos. Sometimes they are our customers, sometimes not, but so that the app can run without a cost for the agent. So downloading the app and using the app doesn't have a cost for them, so that we facilitate the journey. So all of these points go way beyond the transaction only. Other points of our uniqueness is the focus on the ID onboarding and verification. So the capability to, in a low-code environment where you just drag and drop the fields that you need, you can build the rules for a tiered KYC. So if the customer is on let's say a journey with the agent saying, these are my conditions to have access to a loan, or this is my conditions to have access to, because I'm creating a tier 1 account. The KYC is adapted for those use cases and is easily configured in the background if something changes regulatory, so that there's no disruption on the from the IT perspective on the change. So this is very important because it tears down the level of identity that you need to use. And if you look into the data, only 20% of agents in Nigeria that are active, they focus on customer acquisition. And this leaves out, in practical terms, 80% of the total addressable market. So because we design for offline first, and because we design with this tiered-based configuration, you don't need multiple apps to manage product A, B, or C. You have a holistic, consolidated view to manage it. More differentiators that we have is also about the missed opportunities that agents report. So around 30% of the agents from data from Ifina in Nigeria, they mentioned that they could be selling more services to customers, and this is a very relevant concept, because when a digital financial service looks into acquiring software or launching this channel, the return on investment is always an issue. And as the business models are evolving not to be so intensive on the transaction volume, like you do a cash in, I get a commission, it will be more focused on a kind of agent as a service, and this is our view as well. And so it's important that when you establish an agent outlet, you're actually able to not only serve your services, but serve a range of services to reduce the risk of this agent going churn because of liquidity, as we mentioned as well. But it gives him capability to serve more the community. So again, back to the profiles, it's actually very important to address what's the reason why this person is becoming an agent. Is it to community, bringing more community social value? What is executing? Is this the prime reason that they're doing this? Or is it related to revenue focus? So it's very important that this is defined and configured in the system, because this way you can design different journeys for them. So all of this that I've basically been talking about is the differentiation that we have. Identity management in KYC, a marketplace with embedded finance where we can configure these multiple products and automatically update the profiles of the agents. The capability of agent networks, the entire life cycle, and then the platform was built with some specific plugs, as I've been mentioning to you, the low code, the Android white label capability, so that you can get all the workflows together in one design place, and you can get and extract all the reporting in one place for the use cases that agents and field staff are supporting.